Our next guest says there's a number of names sitting out the fall, selling that are worth a buy. Chartmaster, that's cool. Carter Worth is over at the Plasma to break it down. Carter, how you doing?
Sure.
Take it away.
Thanks, Joe. First, we thought we'd do a little S&P just to try to figure out where we could go. What we do know, of course, there's no way out of this, right, is that we have a double top. In fact, that spike high in January, record inflows into ETFs, spiders, and iShares, record. Also, highest RSI reading on a weekly basis since 1990. Pretty classic blow-off, pretty classic double top. And we also have a well-defined trend line. We have bounced once, twice, 3 times. We got here a 4th time. We bounced ever so slightly, but we undercut. And that's the issue. Ultimately, we have a double top. We have a break in trend. Where could we go? There are reference points. If we go just to the low of Monday, October 29th, that's about 4%, 4.5% from here. We close at 27.26. That's 26.03. If we were to go to the February lows, that's the 9th, Friday the 9th of February, that's 25.32. That'd be about another 7.5% from here. Doesn't have to stop there, but at least it gives you some reference point. If and as we go lower, I think we do, where we might go. Let's go to a few stocks. You know, classic defensive is soap and cereal, they used to say. Humana, it's a beta of 0.8. That's the key, right? It's a low beta stock. And just as is the case, but not with the market, it has bounced off its trend line over and over and over. And it, however, successfully, as opposed to the market, has been able to stay on trend. That's appealing. I like the relative strength. I like the uptrend. Let's do another one. Here's Ecolab. These people do chemicals and water filtration and basically play to the industrial space, but on sort of a safety trade. Here, too, the general principle is it's stayed on trend, has not broken trend, and has gone higher. Let's try another one. Just roll through them quickly. Abbott Labs, it's really the same circumstance. Good uptrends, and then the point is stocks that have rallied, whereas the market has faltered. The bet being that these are relative strength winners, absolute winners. Thermo Fisher, really it's the same thing. I'll just move along. Let's go to the next one. Here's, well, baking soda. You know, this is the same principle. These all act very well. The last chart is a basket of those 5 stocks. Humana, Ecolab, Abbott's, Thermo, Church & Dwight. Is this not the very definition of a virtually perfect uptrend? And I'm going to make the bet that that's going to, if it's going to roll like the market, you'll have plenty of time to figure that out. But for now, the bet is otherwise, up and to the right. Quality stocks, or you can call it whatever you want. It's defensive. I think it's the place to be.
Chartmaster, come on over here. You're flying colors. I mean, you get invited over.
Look at that. I got the red
invited
and the
over to the desk. Was there any precipitation likely in any of those things you overnight? Can you tell which ones?
Exactly.
Hey, so these mics are on at all times. Is that what I just heard?
We actually keep it cool when
that's fun,
the guests
isn't it?
are on.
Yeah, the mics never go off. That's whoa, that's dangerous. Carter, do you have any names that are your favorite in that group?
Yeah, I would say Abbott Labs, probably best in class, meaning just steady. But Humana is quite good, and not shown there is UNH. I mean, these are both absolute winners, and then the key is we know this. When a cycle goes, you have bifurcation. We had that, semis, industrials, financials, but the market stayed up. Then they break the high flyers, Square, Microsoft, Adobe, Amazon, and then people cluster into defensive names. It's really not over until you go after those, which is what your point was. Really, 3% in the 2-year note's not so bad right here.
So, Carter, when I look at the S&P where you started out, now I'm negative as you are. I believe that we feel that we have a little more further to go. But I saw something today that could possibly be an inverted head and shoulders.
You're talking about that minor head and shoulders from the, sure, that's very possible. I think it's maybe hoping. I mean,
I think it is.
I think it's hoping. You know, the chart in the S&P and seeing a minor head and shoulders bottom. I think the issue is this: the damage done is substantial enough that we heard how long on average it takes to get back to a new high. But the further we sink individual securities, the more likely it is that this topping process that's been underway, frankly, since the blow-off high in January, is enduring in nature.
Especially with a 4% weight like Apple and some trouble here. But you've talked about in past shows, it's not a bad day to remind us the bottom of the channel on the S&P, where we could still stay in this bull zone and actually just be respecting the bottom end of this uptrend.
That's right.
Where are we?
Let's say we get to the, well, if we were to get, you're talking about the 10-year sort of chart?
Sure.
Well, that would be 2,300. But if you just look at the bottom of February 9th, to go down another 7.5%, that would get it. But here, let me maybe end with this. I think the worst single thing we could have done is the fact that we bounced 7 8% off the lows of the last 2 weeks. What you wanted to do was actually go down another 7. Not because I'm rooting for down, but then you can get a cathartic capitulatory bounce. The fact that we bounced 7, 8%, some stocks 20 and 30, that keeps hope alive. People say, oh, it's okay, year-end rally. A year-end rally, listen, they talk about the statistics. Unless you have 200 inputs, we only have 100 plus years of inputs in the market, it's statistically insignificant. And buybacks, these are all just hope. We don't know that we get a year-end rally, and we don't know that we get buybacks. That's not a thesis, it's not a premise, it's not a strategy. It's just maybe it happens, maybe it doesn't.
We didn't close down 10% on anything, right? Maybe the
No, individual, a lot of individual stocks.
No, I know.
No. But the S&P's
I mean,
peak to trough decline was 11.47%.
It didn't close down 10, did it?
No, but intraday prices, it's like saying.
No, I know, but
yeah.
I mean, for a decent, you're looking for a toilet, you're looking for the flush, right?
Well, what you want in order to get it back, you've got to get people out. You've got to shake people out. If you look at the most widely held stocks at Merrill Lynch, at Schwab, at any of the online brokers, it's still the same names, and people haven't abandoned them yet. It takes a lot of damage for people to finally give up on their beloved